Welcome to a Wiser Retirement Podcast, where we believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Robert Swarthout, founder, CEO, and portfolio manager of Teton Crypto Capital. Today, we're going to talk about the state of the advisor crypto education, E3 ETFs, and the Memecoin frenzy that has emerged.
Yes. For, depending on what side of that on, for better or for worse. So, yeah.
Robert, always good to have you back. You did something really nice. Good friend of Wiser. You flew out to Austin with our own Andrew Pratt, the king of data, to go to what we thought was a crypto conference. Turned out to be a Bitcoin conference. With Rick Edelman, a big proponent of using Bitcoin inside portfolios, and has a whole organization through DAC FP that helps advisors understand about crypto. Mm-hmm. A little bit about, I'd love to hear about your experience. So if crypto education was 1 being I know nothing, 10 is I know the most, right. I would say in that audience, you are a 10. The audience itself is probably a 2, and Andrew's probably a 8 3/4, maybe.
Yeah, you're probably not far off there. I'm never going to say I'm a 10, but and Andrew's certainly up there. The crowd had varying levels, as you would expect, but I would say the average probably was a 2, be my guess. Certainly some 1s. And, you have to kind of keep a perspective of, it is a conference for financial professionals to learn about crypto. So a bit of self-selection. I guess in that process, you also have to realize this is probably like some of the most educated in some sense about crypto when it comes to advisors. Obviously maybe not the most, but certainly up there. And it's just, I think there's some positives in that. There's some potentially negatives, but it was a good conference. It was a 2-day thing that we got to stay inside because Austin was like 100 degrees outside, so it was nice to be in the AC. And I kind of jokingly mentioned to Andrew that you go to these really hot cities, and Atlanta may end up on this list if we're not careful, but you go to these cities where they have a bit of a complex. It's so hot outside, they want to try to show you how good their AC is, and then it's like 60 degrees in these rooms. It's like, right. I don't need to shiver. Just something comfortable would be great, but it was enlightening, I will say, going to that conference.
So what? Okay, so tell me some of your frustration points. Like I know you mentioned privately you thought that advisors should be further along than they are, but also people were coming to learn about.
Right. My frustration / hope was advisors, at least the forward-thinking ones, have been maybe ahead of the curve on an education standpoint. I don't believe that to be the case. There's certainly some. I think Wiser certainly falls in that bucket. You guys have done an amazing job of educating yourself over the last 2, 3, 4 years about crypto. Maybe because you find it curious and you just wanted to learn. But more so, I think that you're trying to look out for your clients. You at first you probably thought this was crazy, and then over time it's become something that's more quote unquote investable. But there was a gentleman that sat in front of me that would lean to the guy next to him and ask questions when he didn't understand, which was great. I'm all for people doing stuff like that. But when at one point they were talking about Ethereum and how it was proof of stake and their staking rewards. I remember him leaning to the guy next to him and asking him, "Is this like a steak that you can cut?" Like, no, this is not a piece of meat. And he was not joking. He was. My guess is this guy was in his 60s or 70s, so definitely not the joking type when it came to this.
Yeah.
But it was just like, man, we have so far to go. But again, good on him for being there, trying to educate himself and all those things. But it's just quite
it's kind
surprising.
of like, all right, it's kind of like if you had someone who's just learning about investing, you would probably teach them about the S&P 500. Right. You would not be diving into small cap stocks and mid cap stocks and so that I kind of see it as, hey, this was a great first step probably in that you're teaching people about how the markets work.
Mm-hmm.
right? And why they should be doing this. I mean, so we've adopted Bitcoin here at Wiser, but our adoption rate's only like 15%.
Mm-hmm.
And how, I guess how I see it is you always have to be on the forefront of learning what's new. That's our jobs as advisors. I think so many firms, they go with what's easy, how can they collect a, probably a net or gross to the client 2% fee every year and have as little interaction as possible. Just rinse and repeat, right? And you have to stay ahead of things. And
Yeah.
it's the people that were there are probably people that think like us. They're just a little further behind.
Right. And, I think that this mentality of I don't need to learn something new until I'm forced to do it is definitely what I would imagine the average financial advisor to be, because they can kind of rest on the laurels of I'm being safe. I'm protecting my clients, blah, blah, blah. And that, I think, is true at some level. But I also think that the ones that are forward thinking are willing to, understand that they're giving the clients all the options, or as many as they can seem reasonable, are the firms that are growing. And, I think that's pretty indicative about what's happening there at Wiser.
Yeah. So what do you think the next, did you meet anybody there that was going to be walking out the door buying crypto for clients or offering for clients? Or
I wouldn't be surprised if there was some that left at the end of those 2 days that will in the next 6, or we're certainly within the next year, but probably the next 6 months do some allocating.
Yeah.
Admittedly, I think the biggest worry about the people that were on the fence about doing it is not about whether to do it. It's about like, oh my gosh, if this does appreciate, how do I deal with rebalancing? That topic came up over and over and over again. I think partially because anytime that Rick had the opportunity to talk about it is he was talking about his Bitcoin $400,000 price prediction and how he got there. And
that's by year end, right?
Year end, early next year, this cycle effectively, right? So my guess is he would stretch it till the middle of next year. But I don't know. There was times that it felt a little salesy. Not in the sense that he was selling them the product. He was selling them on the idea of buying Bitcoin, which obviously, if it goes up, makes his value of his Bitcoin worth more. So it's a bit self-serving.
Right.
And, I don't care if it's Bitcoin or crypto or anything else. When something seems self-serving, I'm just kind of like, I just tune those kind of people out.
Right.
But there's allocations coming. There was I call him a kid. He was in his young 20s, but he was from Mass Mutual, and they're working on adding it to their platform by their advisors I think by the end of Q3.
Yes, the ETF or
ETFs, yes. So doing allocations. Ironically, Mass Mutual on its balance sheet has owned Bitcoin, the raw Bitcoin they bought $100 million of it, I think, a year ago. Yeah. So they've done well on that investment. But their advisors couldn't obviously sell it to clients, which is ironic. But so he just talked through their their thought process about like each of them has to have $100 million, and there's they're going to potentially add I think 9 different ETFs. They're not really picking and choosing which ones they'll offer, and I guess leave that up to the individual advisor.
Interesting. Well, what else is on your mind for today's chat?
I think that when it comes to education, being in it every day makes it feel like everybody should know as much as you do, right? I mean, that's it, no matter what happens in life. And taking a step back, and it's been a couple weeks since we've been out there, so I haven't had a chance to reflect. I realize how early it is, but I imagine this is one of those things where a year or two from now, we're going to wake up and like everybody, not everybody, but figuratively everybody within the investment space is going to have decent knowledge about it or know where they can get good education. And, whether it's just Bitcoin, we'll talk about Ethereum here in a few minutes. My guess is a year out from now, you're going to have more than just 2 types of ETFs. You're going to have potentially a third one that becomes more of like, not an index of 2 things, but kind of. And then that one obviously will expand over time as you get a Solana or XRP or whatever ETF going after that.
Speaking of Ethereum, I know we're about to talk about this, but the potential launch of the ETFs, there's been a lot of debate on whether or not Ethereum ETFs will actually hurt Bitcoin ETFs because people would divest of the Bitcoin in order to buy more Ethereum inside their portfolio, with the idea of thinking if you're allocating 3% to crypto, that's your max. 3% to Bitcoin, that's your max. So if you wanted to do 1% Ethereum and 3% Bitcoin, then therefore you would reduce that by 1%. Do you have any thoughts on that? Have you seen anything that would support that happening?
There was some discussion about that at the conference. Admittedly, there was talk of, what is the correct crypto allocation? In their mind, it was only Bitcoin. But at the end of the day, crypto is going to be more than just Bitcoin that's investable. So they were talking about a 1, 3, 5% allocation. Match Mutual is going to allow their advisors to do up to a 5% allocation. They'll let it run to a 10% allocation before they force a rebalance, unless the advisor does it before that. So there was all sorts of conversation that happened within that, those ranges. I think that, there could be some selling of the Bitcoin ETFs. This is certainly a very different dynamic than what we saw in December or coming into January of this year, leading up to the Bitcoin launch, because there was a lot of pent-up demand. And there was also those private trusts that held Grayscale's Bitcoin GBTC. There was many of those holders that were in bankruptcy. Those estates were having to sell out of that. So there was a lot of sell pressure to get out of that trust. The first week or two following, all we saw was selling. And then it had this crazy run following that. I don't, that dynamic does not exist for Ethereum. There's no private trust that really of any scale that matter. And I think that, is there $20 billion waiting to buy Ethereum like there has been for Bitcoin? Absolutely not. Maybe over the long term, but nothing foreseeable future. My guess is if you look out a year, if the ratio of AUM for the ETFs for Bitcoin and Ethereum probably is going to near kind of the market caps that you see for those two respectively within the crypto market. Doesn't seem crazy for it to kind of end up like that. And it potentially stays a little out of whack where Ethereum is on the lower side. So maybe an 80-20 type distribution.
So probably a quieter opening is what I'm hearing. Not as
I just don't see where the demand is going to come from. And also people people, I use air quotes here, understand Bitcoin, right?
Right.
Good luck understanding Ethereum. Like
the idea of things, right?
It could be a lot of things. There's no easy elevator pitch for Bitcoin's as digital gold or whatever you want it to be. There's short sentences to use. I couldn't even come up with one that is understandable for the average person when it comes to Ethereum. And I often joked at the conference with Andrew. I was like, good luck finding advisors that can spell Ethereum. Let's just start there.
Right. ETH.
They're just going to go with the ETH symbol. But I don't know. It's super early days, and obviously, I think in some ways it's due to have an ETF because it's the second biggest one. And if we're going to work our way down the market caps, then fine. But
I would say that's even more important reason if you do purchase an Ethereum ETF that you do it with a larger company that you feel like is not going to shut it down if they don't hit the $100 million mark.
Right. That's really at risk at this one. The Bitcoin one's probably not as much.
We lost one.
Well, but ARK said they were leaving, but then Van Eck said they were leaving, but they have since marketed it and got it up. So I don't know.
Oh, okay.
I can't keep track. Maybe it was a going out of business sales sign.
They must have. I guess they found an institutional investor to keep them up. That's crazy.
Yeah, but it's a in this case there will be 8 ETFs that have applied as part of the process. There's a 19B form that gets approved as well as an S1. The 19Bs are all approved. The S1s are in the final revisions, very light revisions, my understanding. And the Bloomberg ETF analyst Eric Balchunas, I think how you say his name, Balchunas maybe. He has changed his predicted date to July the 2nd for launch date for these things to trade. So we're getting close, potentially.
Yeah.
It's a
it's going to be interesting. I think that there's to me, if you're really positive on this space, you would still want to include it. But for me, and at my firm, I don't know that I would add any more allocation that I've already added to Bitcoin. So we'd have to take away from Bitcoin in order to do that. So I think for us, we'll take a wait and see approach. Same way we did Bitcoin. Wait and see how it launches, how it trades. Rather miss out on a little bit of the upside. knowing that this is a 10-year investment anyway, and that everything has been launched very efficiently.
Yes, and I think that's a very reasonable way to approach it. That's probably not the message you would have received at the conference. He wouldn't have told you that you necessarily were missing out, but he would make you feel that way.
Yeah.
So it's entertaining.
When we started offering Bitcoin, I told everyone it's a 10-year journey. It's not a get rich overnight. It's definitely something to be part of the future, but not easily explainable to our average client right now. But at the same time, you have people that are asking for it, that are much more educated on the topic. And that turned out in our firm to be 15% of the population. Younger based firms might have something much higher,
Yeah. And my guess is the people that didn't respond to your email come this fall, if the prices run up, are going to be saying, now's the time, Casey.
That's a whole other conversation. Yeah.
Right. Yeah.
Hindsight bias is very deadly.
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity? Simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
So tell me about this meme coin frenzy. So which ones are you specifically talking about? Is Doge back? Is people Doge again?
Doge, kind of, sort of. I mean, there's...
just for our listeners to be clear, these are coins that really have no purpose.
Correct. And that's the way I would have described them the last time we recorded a podcast. And not to say that I've had an epiphany, but I've thought about this a good amount the last couple months. It's like, why have the meme coins done so well in a crypto market that is literally since March been not great to be in? And I have actually come around on the topic of they're useless and they're bad for crypto. They give it a bad look, all the bad things, to actually believe that they actually have a place. And in some sense, it allows people to buy into pop culture. It is, you used to be able to, if you were into Pokemon, you could buy the cards. This is in some sense like an NFT, but it's really just a token that can have appreciation, and you're part of a trend, a movement. So one of these is called Dog with Hat. I mean, just absolutely stupid names. There was some tokens launched that were literally one that looks like a caricature of Biden called Bowden. There's one that's for Trump. I forget exactly.
Oh, just yes. I've seen these. There's the All In podcast.
Yes, they're probably talking about it.
A couple of those guys had coins created, but they didn't do it. Someone else did it.
Right. So, and especially celebrities, they have to be very careful they don't get trying to promote something. But yes, people can launch. I could launch a Casey coin right now, and you could do nothing about it.
Yeah.
No
one would buy it. No one would buy it. So it wouldn't matter.
So it's at the end of the day, I think it's something it's a cross between entertainment and pop culture, and and investing, oddly enough. You can lose your shirt very quickly in these things, or you can make money. It is no different than pure gambling. And it's the whim of social media where these things go when they launch. Whoever the promoters are, if you want to call them that, behind these, have got to be making so much money. Because these things have a lot of times crazy inflation rates, or the initial teams have so much of the supply.
I'm sure the SEC would love it if we launched a Wiser coin.
Right. And obviously, they would care about that. They don't care about all this other stuff that some people may describe as just absolute junk. So I don't know. It's I guess, we jokingly say about the Wiser coin, but the SEC would obviously track that down much harder than they would track down stuff that probably is more important. So
yeah, no, absolutely. I mean, also too, I mean, I don't know if we talked about this just in person. It wasn't on our podcast. It all blends together. But if I wanted to sell my company, let's take it away from Wiser for a second. Let's say I pour concrete for a living, and so if I'm pouring concrete for a living, I have some inventory of trucks, maybe I have a lot of gravel or something.
Different equipment, yeah.
But if I was selling my company, you could do that. You could make it. You could tokenize it, right?
Absolutely.
But
yeah.
But then it's tradable at that point, and that's what the SEC is going to come down on. You can't be tokenizing companies, selling them to people as a financial advisor. If I'm trying to sell a tokenized company.
Even if you're not a financial advisor, like even if you truly are the owner of the concrete company, you tokenize that. That is a security all day long. Yeah. Like there's no getting around that.
That's true.
So that would be an unregistered securities offering if you didn't do your paperwork. And this, I think, highlights like the laws have largely worked since the 40s to get us to where we're at for these. And it has created a structured market that I think where you might be able to argue hasn't worked is very burdensome to do. It's an expensive process, all those things. Yeah. Like, do the laws need to be updated for an electronic economy where this stuff, if you mix in with the blockchain, all of a sudden becomes much cheaper and easier to do? You know, the questions around disclosures, and there's a lot of things that need to be figured out, but it's we currently are living in a 1940s world with 2024 technology, unfortunately. So.
Well, there's a lot of tools out there to fix that. Interesting to see which one wins.
So I think that part of, maybe a shift of topics here a little bit, but like part of getting the regulation that we need in place is getting the right people in Congress. And that also can go all the way as high up as the president. And they also, the president, he or she, can also affect who runs the SEC, who runs these agencies. So, a bit of news from the crypto world is there's a crypto super PACs that have been raising a lot of money to help promote candidates that are on either side of the aisle that are pro-crypto. In some sense, it's to get out a anti-crypto person out of Congress or to get an additional pro-crypto person into Congress. And these crypto PACs have raised over $200 million. And, I would say 160, 180 million, something like that, has largely come from crypto companies that have the balance sheet to be able to do something like this. So Coinbase is, I think, in for a total of 50 million at this point. Ripple's in for 50 million. A16Z, the VC firm, is some number that I think is over 20 million. I don't remember their exact total. And it just adds up, right? So they have spent some of this money for the elections that happened in April, May time across the country. And they're gearing up for, obviously, the election cycle in the fall. They saw some early traction. You saw candidates that probably wouldn't have got it as far as they have at this point if it wasn't for that support. And, I think at least the case that I'm following, the situation I'm following the closest is Elizabeth Warren is up for re-election in Massachusetts.
Yeah. Who's been very into crypto as well as Biden as well.
Correct. And
although his campaign is now accepting crypto donations, I don't know if that means there's a change in tactic there. But
yes, so I would say largely his anti-crypto policy is really Elizabeth Warren's crypto policy that he is just running with, is my understanding. Mm-hmm. And I think that his campaign is accepting it. They did a big switcheroo probably about a month ago, where they went and started saying, they put out this like presidential notice saying, we think the agencies should work together to come up with sensible crypto regulation. We're like, oh, no, duh. We've been asking this for years. Now, because it's an election cycle, that's when it's a good idea to do this. Mm-hmm. And obviously, unlikely to get passed at this point, just due to the state of being an election cycle. But it just seems like you almost can't trust it when it's coming from them because they've been so anti for them to go do a true 180 at this point. And this follows what Trump did almost 2 months ago, where he was like, I will put crypto regulation in place. I accept crypto, all these things. He's used that as a point in his favor. We'll see if it works.
He's been doing a lot of things. I mean,
yes,
it's been absolutely crazy to watch. And that we don't I try to steer clear of political commentary, but I mean, he's been able to stay on point the last few times that I've watched him. He's becoming less of the victim, which in the past he's always been a victim. Nobody wants to vote for a victim,
Right.
but this whole felon thing has really boosted him. $52 million almost overnight raised off of that. He's changed his crypto language. If you're we see it in wealth management. We see so many things from a different perspective. But I think the first time in the last 3 years, I have literally watched. They talk about this wealth gap. I have literally seen it firsthand. Yeah, and it's crazy. His whole thing of waitresses or tip money will no longer be taxable. Whether that passed or not, I don't know. But sometimes it makes sense to me, man, because you think about it, in Georgia, we're paying was it $3 an hour, maybe less than that, and then they make tips on top of that.
Correct.
Where in states like Washington, there's a $20 minimum wage, right? They're all making $20 plus the tip. There's waitresses out there. We have clients that own 8 different restaurants near Washington, Seattle, Washington. You got a waitress busting her ass all week, and she's making over $100,000 a year. Now you still got to live in Washington, so
right,
it's still not that much money, but it's way better than other places. So anyway, to kind of bring us back on topic here, I would just say that the crypto has proven to be another place where voters are like, hey, this is what I want. This is direction that we see this moving in, and you continue to ignore this topic. And now it's evolved to you continue to ignore me. This and I think become very personal. And I'm not sure why Democrats are so anti-crypto, other than it goes back to the place where the only people that should be providing for you is the government.
So I think that's part of it. And I also think that, again, the anti-crypto piece at least comes from Elizabeth Warren. She is, if you kind of step back, somebody kind of helped illustrate this for me a couple weeks ago. Her platform is really anti fill in the blank. She's anti-big banks. She's anti-crypto. It's hard for you to tell or to come up with an example of what she's actually for. Well,
she's anti-big bank because of the financial crisis.
Right. And she's been chirping that one for a while.
Yeah. We're hiring new people here now that we're
they don't remember that. Yes, exactly. Yeah.
Not going to get young voters on that one.
Yeah. So, when it comes to crypto, I think not that it will be the swing topic of the election. I don't really think it's at that level, but it's definitely going to influence some people. And really, the last stat that I had heard about crypto in the U.S. is up to 50 million people have owned or currently own crypto in the United States. Okay, so 1 in 6 people in the U.S. You
add that to another special interest group, that actually is enough to sway an election.
Absolutely.
It's this close.
Yeah, and if you kind of flip that on its head, is there anybody that's going to vote for a candidate because they're anti-crypto? There may be 5 of those people in the entire country, right? So it is largely a disproportionate population.
No one thinks that crypto is going to destroy the country. There are people who think crypto is a fraud. I've heard it called a Ponzi scheme, which doesn't make sense. That's not what a Ponzi scheme is. Where you have the pro crypto people that believe that the government has done, and I don't want to lump everybody into this, but many of them believe the government has done a poor job of managing its resources on the crypto side, and therefore, all this got created because of the financial crisis. So therefore, we need a place to be able to store money that doesn't depend on the politician on its survival. Is the concept.
Yeah, it definitely grew out of a libertarian mindset, financial crisis. Initially, the early Bitcoiners in particular thought Bitcoin was going to replace the need for the U.S. dollar. Obviously, that's absolutely insane.
Not yet.
Not yet. And quite honestly, I'm not sure I want to live in that world.
No. I have really smart friends, and one of them a few weeks ago, we were all sitting around breakfast, and he's like, so if the market share of crypto is bigger than silver, but it's not bigger than gold, what happens if it's bigger than gold? But if it's bigger than gold, how much bigger is it than the U.S. dollar in market share? And, you start connecting the dots. You're like, wow, if crypto or if Bitcoin specifically was that big and the dollar becomes that small, yeah, that's a whole new world order, probably.
Yeah. I don't think the world is too drastically different if, say, the Bitcoin market cap was bigger than gold. It will be at some point, in my opinion. Like, you start looking at the other assets class bigger, real estate, the stock market, different things. Those are very different numbers than gold. I think gold is what, like 18, 20 trillion, something like that. Bitcoin is roughly, 8 to 10 times smaller right now. So, it'll happen quicker than we probably will remember. But it's a day that's coming. So,
yeah, more people will own it if it gets pushed to Rick's number, $420,000 each.
Right.
I would say you got something to deal with there too.
Yeah. So, there's Rick's number at 420. You have Michael Saylor came on the second day, and his number is like I think a $2 billion. This is gonna be a $2 million number. Kathy Woods she decided to up her 1 million to 5 million.
Oh, she's at 5 now?
Yeah, wow. She's at 5. I can't keep track. And I would like to actually hear at least the rationale behind her number. Rick gave his in, it's math that he admittedly conveniently made up. But it's better than some of these other numbers where they don't give you the time frame or the how they got there. So
yeah, I feel like if I said mine was 5 million, then I would get my spot on CNBC and interviewed. So
well, you would be busy doing that.
Yeah, I think some people do it for the attention. Somebody like Kathy Wood gets that attention, then you start looking at what she does in her funds, and you buy some of her funds. So I really don't buy into that kind of hype. But as I told our clients in our client letter, this is part of the future. It's coming. Whether you liked, having your movie stored in the cloud, that's just what happened. DVDs, the DVD section at Best Buy is very, very small.
Yes,
right? Very,
absolutely.
very small. And DVDs, I feel like we're here just for a hot minute, and then we moved right off. We moved to Blu-ray, and that was even here for less than that. So this is the future. And the question is, do you want that to be part of your portfolio or not? And I think the answer is yes, but just a very small percentage right now. So, But yeah, politics and crypto. Who would have ever thought, especially after SBF and his debacle, that it would converge like this
in such a short period of time, too. I mean, year and a half.
Well, Robert, it was good to hear from you again, and thanks for keeping us informed on what's happening in crypto space. We have lots of podcast episodes centered around crypto. If you want to learn more, episode 226, 220 are also good crypto, where we talk about CBDCs, and then we talked about Bitcoin. Is it more than a digital gold? I think it's important to everybody to understand that we're not buying our McDonald's hamburgers or Chick-fil-A hamburger or sandwiches with Bitcoin. So this seems to be molding into a stored value to me.
Yeah, the Bitcoin piece. Yes,
the Bitcoin piece, where I feel like this Ethereum is going to be much, much different and harder for people to understand, as you said earlier. But there's a lot of things that can run on that platform versus what you can do with Bitcoin. So I guess we'll have to stop talking about Bitcoin in the future and just start talking about Ethereum and more blockchain kind of topic.
Yeah, we'll have to be willing to get in the weeds and maybe go a little deep on some of these next few podcasts to try to explain what it might be used for.
All right. Well, I understand the president of Teton Crypto Capital is headed to the Tetons. Yes,
I'll be out there for about 2 weeks. I'm looking forward to it over 4th of July.
Good. Enjoy it, and be careful with the fireworks.
Yes.
See you, Robert.
See ya.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced by Rachel Dotson. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.